everybody, welcome. This is the Short Squeeze Masterclass. In the course of this video, we're going to be going over three major topics, which is how to locate a short squeeze, how to identify when the movement is actually taking place, and then how the heck do we play these things? Those would be the three major topics of the video. A little bit about me. My name is Scrooge Max Bucks. I am an average Joe trader. I do not have $1 million in verified trading profits. I do not have a sports car. I do not fly private. I am just like you guys, just like a lot of you guys. As a matter of fact, my portfolio might not even look as good as some of you guys. But what I have been able to do is I've been able over the past year of trading to really find some successful strategies and approaches, and I've been able to do some pretty amazing things in just a short amount of time. So even though I might not have the accolades yet, the information is absolutely solid, and I'm well on my way to the top. Okay, so that being said, why am I doing this video? Well, I got to be honest, this AMC GameStop stuff is worrying me. I have been looking at short squeezes for a little while now, and my thought is, for so many people to be interested in a topic but not do any research about it is absolutely insane to me. I see people who are willing to put down six figures, almost $1 million on this play based on some meme or based on something that someone else said that was going to happen, or maybe even based on what happened last time. And it scares the heck out of me, that people are going to trade so recklessly. And my thought is, you guys had all these years in between the last pump to learn about short squeezes, and how many of you did. So if you are here today and you are watching this video, you've taken the first step towards learning more about these, and that's how you're going to separate yourself from everyone else who has not found not everyone else, sorry, for a great majority of people who have not found the success playing these plays that a lot of other people have. All right, well, before we get too deep into this, I do want to share with you guys a word of caution about GameStop and AMC. And possibly a little optimism too. I guess it'll just depend on how you have to look at it. So I just want to remind everybody that after GameStop went from $4 to $400 during the last time they were able to accomplish this, they had their finger on the button in a big way. And by they, I just mean the algorithm. For whatever reason, no matter how much money was pumped, no matter how bullish it was, no matter how many people had them diamond hands, the price never went up like that again. So, if you're going to do something that is being looked at and targeted by the other side, it might be a good idea to just avoid that. So a little caution about GameStop and AMC. There's no guarantee they're going to go parabolic. Do I see another pump coming? Absolutely. There's so much momentum behind this thing, but how high will it go is really just dependent on the algorithm, as we've seen in the past. So another word of caution is that, when these things happen, pumps and dumps, the people at the top of the ladder pull their money out without telling you. They want to gain the most profit possible. Then when they pull their money out and the money and everything starts tanking, they really don't care what happens after that. So I believe that we can do better. I believe we can find a better way. So although I do think it's possible that AMC and GameStop are still going to give you a couple nice spikes and some good gains, I just don't think it's necessary to focus on meme plays that are going to be heavily manipulated. Is I guess the best way that I can put that. So over the course of this video, we're going to focus on ways to find you guys your own plays, and that way, if they do run, you can possibly get that 100 times move, as we've seen with FFIE just this week. All right, cool. So without further ado, let's get this thing started. The very first part of this is going to be about how to locate these plays. Screeners, simple enough. So we're going to highlight two screeners here for you guys today. The first one's going to be Fintel. The second one is going to be FinViz. Now, with either one, you're going to be able to find short squeeze just fine. And with Fintel, it's actually a paid subscription service. So, you guys have either, one option or the other. Now, with the you get a lot more in-depth information like what we're going to go over now. So as you work your way through this, what you'll notice is that there's some metrics here on the right side, which my face is covering right now. um, yeah, anyway, so on the right side, what you see is a short squeeze score. And what this does is it puts together the metrics above that you'll see here, or that you won't see, but I'm going to tell you about right now. So you got the borrow fee rate is right here. The shares available is right here. And I'm going to click each company and show you guys this a little bit more in depth anyway. But they have days to cover, which is right here. And then they have the actual short float, which is right here. Okay, so these are some really good metrics that you can use to identify right away what has the potential to squeeze or what is currently being squeezed. The short squeeze score on the right just kind of takes all of these values into account and gives you a ranking, which you'll see here on the left. So it gives you just kind of like a top 10, top 20, top 30. Oh, sorry, actually, I think it's top 250. So you get the top 250 most likely plays to short squeeze. I like to just stay kind of in the top 30 or 40. But anyway, when you do go into these companies, what you'll notice is you get a lot of that information, just a little bit more detail about it, right? So you have the short interest float, the days to cover here, okay. Um, how to utilize the days to cover to see how long the short squeeze is going to go. I'm still dialing that in, but that's definitely something there that you can take a look at. Here, this gets updated pretty continuously, and it's just what the exchanges are reporting as far as how many shares they have available. Okay, so you can see here that DJT, was doing really well a few days ago. They had 60,000, 50,000 shares, but ever since they dropped to zero, they haven't been able to get that many. It's only 10,000 now. So more and more time goes by, there's nothing available for them to short. They're not going to be able to continue put short pressure on there, obviously. You also have short borrow fee rates. I'm told when these rates get much, much higher, it becomes a lot more difficult for them to short or just not as profitable. So they just feel like they don't want to. You also have short sale volume that's here. You have short sale, fails to deliver. I'm told are very important. So the reason I don't know a lot about this information is because, as far as I'm concerned, it doesn't matter. I'm only using this list to get ideas. And then what I'm going to do is I'm going to show you guys what a short squeeze actually looks like. So then you would actually just take this list here without even looking at any of that data if you don't really want to, or if you don't know how to play that stuff, and just grab these plays, plug them into your trading view, plug them into whatever you're using to chart, and try to identify the movement that we're about to go over here in just a little bit when we talk about how to actually identify the movement, which is the next part. So just take these and use these to get you ideas and then try to identify the movements as they're happening. Okay. So here you'll see a list, that gives you this in-depth information, like I said. But when you go over to FinViz and you put in the one filter, float short over 25%, you'll notice that a lot of these plays, guys, are the same plays, right? A lot of these plays are the same plays. As a matter of fact, DJT was at the top of this list just yesterday. So not sure where they jumped off to, but you can just see how like a lot of these, like Hollow, SPWR, a lot of these were just squeezing recently. Or a lot of these you'll notice that are duplicated on here, right? So you can get the information either way. Now, also FinViz is going to give you some other good stuff like institutional transactions. I noticed the ones that are freshly squeezed out will have a very high dump of their institutional transactions. So when they literally just have to get completely out of their position seems to be when the squeeze is actually happening. So I'm not sure if you can utilize that data to give you some sort of a preliminary idea of when it's happening, but it's not going to matter. Like I said, we're going to show you guys how to do this. But anyway, the last couple things we have here is the institutional ownership overall, the insider transactions, the insider ownership, and then we have the outstanding and the float here as well. So with the float short and some of this information, some of you guys might actually know how to utilize this data a little bit better to find how these things are about to happen. But if you don't, and all of this just looks like numbers to you, and this really didn't help you in any way, don't worry, because what we're going to do is we're going to take this list here and we're going to plug it into our chart, and we're going to go ahead and compare it to what I'm about to show you guys now to show you that you can identify these things as they're happening, still make money. It's not like really a late to the party kind of situation, because there's multi-day movement. Some of these things take a week or 2 weeks to actually finish. So there's so much time to play them while they're happening. The big thing is just knowing when they're breaking out and then just really just honing in on it and watching it. And the third thing we're going to go over in this video, guys, I'm going to give you a handful of ways to play these plays, not just one way. So through testing and through time, you're going to find successful ways to play these, and double, triple, and quadruple small tiny micro accounts almost every week if you can play these right. So there's a lot of juice here. Let's go ahead and get to the next section. Okay, so we have our list now from the screener. We take those plays, we plug them into our charting software. Personally, I love to use TradingView, web. It's free. Make an account, but I'm using their free version. Okay, so what you're going to be looking for is right here, right in front of you. Okay, this is almost every short squeeze. I can't say that. Sorry. A lot of short squeezes follow this exact same pattern. Okay. So this is what we're looking at. So the day one movement is going to be the indication that your squeeze has begun. A lot of people are going to be thinking, oh no, I've already missed it. It already went from $2 all the way up to $4. It's 100% gainer for the day. There's no way I can possibly get in on this. And then, or some people, oh my gosh, it's going to go so much higher, and they'll jump in, and then they'll get out right here when they start losing some money, and then they'll miss the movement. So what you're looking for is the second leg, the second version of this, because there's no guarantee that it's going to happen. There's no guarantee how many days it's going to take. You need the chart to confirm. So what you're going to do is, after the first day of movement, you're just going to put kind of a little mark right there. And after the second day, when it spikes past that high, it's on. It is absolutely on. And I go look at these charts time and time again, and I see this exact same movement. Okay. And that's how you know the squeeze is actually about to happen. This is the spot that you really want to catch and start getting involved, because, maybe this was it and it's just going to trail off back into nothing and never really make a move. But the second one indicates that, okay, we're actually going off to the races. This is where you want to start getting entries. How you want to start playing it is the next section. We're going to get right into that. But let's go ahead and just take a look at a couple more short squeeze plays to see if we see this same kind of movement anywhere else. Let's see if it was just them, or maybe if we can kind of see this stuff anywhere else. And what you'll see is that with rent, it just started the 16th, a couple days ago. So we got our first day of movement. It pulled back. So this would be one you want to watch, and then just go ahead and put a flag here and wait for it to actually make its move up. But with rent, I feel like there was another one. There is another one. Okay, so we go back a little while with rent, and we find another really, really good example of what we're talking about here, guys. So you had your first day of movement. Second day, it popped that spot. Now you're off to the races. You could have caught it here on the way up, or you could have just held it all the way to the top here. You know that the squeeze is happening with that second leg. All right. Now let's take a look at another short squeeze play and see if we can identify that same pattern. Okay. And this is one that just squeezed a couple days ago as well. Hollow. What do you guys notice? Same exact thing. It squeezed up, it made a high, it came back down. Once it busted that high, it was off to the races. So you can see that with that second leg movement, you have a really good indication that things might go a little nuts. And yeah, the first movement from $1.60 to $2 was fun. 50 cents on a $1.50 play, that's a 30% gain. But imagine this one. Imagine this one where you caught it from 220 all the way up to $4. You doubled your money on that one. And that's just if you bought shares. If you're into options, that could have been a really big play for you guys. When these things move a couple dollars or when they double and triple, FFIE, for example, went times 10 this week, guys. It went all the way from 4 cents, where it was at the low, right here when it all started, it was at about 4 cents, all the way up to $4. That's a 100x play. I couldn't even imagine if you had a 50-cent call in the beginning and you were just playing around with it because it was only 5-10 bucks, why not, and then you were able to sell it at that $4. That might have been worth 500 bucks. That 10 bucks might have been worth 500 bucks. That might have been worth $1,000. I really can't say for sure, but that kind of parabolic movement is absolutely nuts. Now, should we be hammering down calls every time we see the move? Maybe not. And that's why I need you guys to stay focused on this video and stay tuned, because we're going to talk about all the different moves that we can make to play this. But before we do, let's just go over a few more squeezes and see if we can see that exact same kind of movement anywhere else. Well, here we go. Here's KSS. Just this week again, or last week, we got a big move. Is this consolidating? Is this going to make its way back to the top? There's really no way to know. And that's why a lot of people do get caught up in these, because, who's to say when this squeeze is going to end? I feel like that days to cover thing could be a really good indication, because that metric actually tells you how long it's going to take them to cover if a short squeeze takes place. So I did notice one had a really big days to cover, and I went back and seen that their squeeze was a little bit longer in duration. I'm not sure if that's something that we can kind of hone in on and something that we can kind of nail down as far as how long these squeezes are actually going to take place. This thing just looks like it's lost its momentum. Once it kind of popped this low here, I would say, it's on its way back down. So, maybe that's one way we can find out. But could this thing rip again? Absolutely. And that's the problem with GameStop, is we're seeing these patterns, right? And with GameStop, we've seen the exact same thing. It went up and it broke that. When it broke that, that's when it was off to the races. Now, is it on its way down? Yes. Are puts winning? Yes. But is it done? Nobody knows. Nobody knows. And that's the thing about these kind of plays. And that's why I was talking about earlier about stuff that's heavily manipulated, because there's a lot of buying pressure right now. That the Johnny come latelys and the FOMO squad are all jumping in, throwing in as much money as they can to try to get this thing to rip back up. And what's it doing? It's still plummeting. So, I worry about plays like this. I feel like, somebody somewhere probably has their finger on the button. And, I say there's no guarantee. Now, do all the plays, all of them look like this? Earlier I said they all do. No, they absolutely don't. So you're going to get some of these kind of plays that work, like this one here, MPW last week, where it broke out, it came down here, it broke here, and then here, I guess, would have been your high and you could have ripped it up. But you can see here, it was in the middle of one of these parabolic moves here, and it just kind of died out. So there's no guarantee it's going to spike higher and spike higher and spike higher, which is why I'm going to give you guys so many different approaches here in a minute to how to play these things, because based on what it's doing, you might see it one way, you might see it another way. But I have seen some things while I've been watching these charts, and that's what I want to share with you guys. So this will be the last one here, guys. Here's another failed one. It just didn't work. It got up there. It got up there a second time. It did actually break that, which would have made, oh, hey, it's bullish. We're going off to the races, and then immediately dumped and never recovered. So, or at least hasn't recovered yet. So, they don't always have that perfect movement. Obviously, this is the stock market. If there was something that you could just play the same way every single time and win money, we would all be millionaires by now. And that's just not how it works, right? So, we're doing our best to just kind of stack the odds in our favor and at least give ourselves an idea of how these things look when they're breaking out, and to give you an idea of maybe good entry points or good spots that we feel very comfortable. Hey, if it got up to that high again and started coming on back down and it failed, maybe we're going to be looking at puts for the next couple days. So that'll go ahead and get us into the next section, which is the part you guys have all been waiting for, which is how the heck do we play these things? I'm sick of watching people get into GameStop and AMC and show me these screenshots, and then by the time I jump in, all I see is red, 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 red. Well, hopefully through this next section, we can find some better ways to approach these things and perhaps be a lot more profitable. All right, so now that you know how to identify them, let's talk about how we're going to play these things. So I made this chart using the MULN example that we had started with in the last section. And I put together this based on how I feel like most people see this and how most people are going to want to play this. So here you got your first day of movement that indicate that it's happening. You put a line across there. Then if it keeps consolidating and keeps dropping on down, you can feel free to grab puts in that time period. As you can see, by the time you decided to jump in on put, well, if you grab puts, I don't know. Anyway, sorry, we'll keep on moving. So at this point, when it breaks, you could grab calls or you could grab shares, and then you would try to time the top and take the profit, or just get a nice little streak, not be greedy about it, and just take the profit, right? Then you have the consolidation, then it breaks again. This would be another place for you to enter and start catching the rip on up. Then when you see it run out of steam or you see a really tall top wick, you would think, okay, I made a little money and I'm out. Same thing. Let's put a line on that top. What happens when it crosses that top? It takes off to the races again. So you have another opportunity to take a profit here. Drops down, spikes again. You have another entry here. Here, you have another chance to take profit. Then, once the movement is finally done, you can see that puts take over and you can just put it all the way back down. Now, this is how I feel most people are going to look at this chart. However, I'm going to go back over to the actual chart because I want you guys to be able to see it without all that writing on it. Okay, so here is the MULN chart that I have all that writing all over. Okay, maybe it's a little more abbreviated, a little more scrunched together, but this is it. This is definitely it. Okay, so rather, I'm going to tell you guys how I see it. Okay, rather than playing how everyone else plays it. Let's really take a look at these things. How often are bulls in control? We got a little bullish movement here. Bears take over. Okay. Little bullish movement here. Bears take over. Little bullish. Bears. Little bullish. Up to here. Bears. Little bullish. Bears. Okay. So maybe the reason that you guys are not winning is because this is you. Okay. Well, here it spiked. So I'm going to grab a call thinking that it's going to spike higher. Oh, no, wait. The next day came and it dumped. I lost a bunch of money. I'm out of the position. I don't want to play anymore. Well, you never even were in it now. You never even had a chance to be in it for the real movement. Okay, well, let's say you watched my video and you're one of those, okay, I'm not going to play that initial move, and you put that line there like you're supposed to. You come to the chart, you come over here, and you set yourself a line right there. And you say and you even put an alert right here. And you say I'm not playing until it goes above that. And then you get in right here as the candle spikes. Sorry, give me just a second. All right, you get in right here as the candle spikes. It gets up to here. You say, yeah, this is taking off. And all of a sudden it dumps back down. And you get right here and you say, oh, I lost. I didn't make any money. I don't want to play anymore. Well, what happened? Now you're not in for this move. So by losing before you even had a chance to play, you don't want to play anymore, and you're missing the best part of the juice. Now, tell me that you have this exact same experience in AMC. Tell me you're having this exact same experience in GameStop. You get in here and you lose. 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 Well, why don't you just flip it? Why don't you just go ahead and reverse it? Every time you're pressing the buy button, or every time you're pressing, the buy call option or the buy shares, why don't you just press put? Why don't you just go the opposite direction? Now, I would not short a shorted play, a short squeeze. Nobody knows where it's going to end. You might end up owing your broker a lot of money. You could blow your whole account in one move. Why? Why would you do this? Why? I don't understand. Options are something that you have to completely expect to lose 100% of. Shorting is unlimited on your loss side. Well, I can't say that, but you just no, we don't do that. So puts on the way down, calls on the way up. That seems to be the way to play these. But every single time I see a call opportunity is very abbreviated. I mean, these are 15-minute candles. The picture I showed you was 30, but I went ahead and just lowered it to 15 minutes so you can see how quick these swings actually happen. If this in this situation, if you didn't catch it in the beginning, you had probably less than a half an hour of actual gains. How much do you think your call would have gained in this little here? Let's say you got in right here when you finally found out about it and you finally jumped in. How much do you think your call would have gained in this little bit? How much do you think your call would have gained in this little bit? It's not enough. We're talking pennies. But let's talk about the other side. How much do you think your put would have gained on this movement? How much do you think your put would have gained on this move? Let's say you nailed the top right here and you put all the way down, and you nail the top here and you put it back down, and you nail the top here and you put it back down. You nail the top here and you put it back down. You nail the top here, put it back down, put it back down. Oh my gosh, guys! In 2 days, you had 5 different chances to get in and out of these. 6. I mean, no, just you know to me, that's what makes more sense. So let's move on to the second way to play these, which is actually the way that I've been playing them lately. Or not the second way, because I just gave you guys 3 ways just right there, okay? But anyway, the next section is going to be focused on how I've been playing them lately, which is how I'm explaining it to you now. If I see a big rip and a run, my thought is that put contract is severely beaten down. Okay, just by this crazy parabolic movement right here. By the end of this third candle, imagine what these put contracts look like. Okay, so it actually doesn't take a big swing down to make your money back. The price, because of how options work, the speculative value of these options while the price is spiking is not going to be the speculative value while the price is going sideways. So just by evening out, you guys can start making some money. Then if it does take that tank back down, you make a little. So the way I've been doing it is when it breaks this right here each time, I grab some shares. Okay, not a lot, but I grabbed some shares. So let's go ahead and look at an example of how this worked out for me this week and how I was able to make a bunch of money. Okay, so I went ahead, let's go to the end, sorry. FFIE broke out this week and absolutely killed it, okay? And a lot of people, unfortunately, got caught up and didn't do very well, okay? So this is what I did. I went ahead and put my mark, let's see, it was at about 70 cents, I remember, is where I got in. Okay, so right here is where I entered the play. I bought some share. No, I think it would have had, no, it was here. Okay, so it would have been here. So on this spike, I think it was right around this candle here. Exactly, guys, exactly. This candle here. I jump in. I grab some shares, and then I grab some puts. Okay, so the puts are down here in 50-cent land. All right, the price is already being moved up away from them, so they were devalued at that time. The very next candle stretched very high. My shares were doing well. My puts didn't look so great. The next 2 candles, while it basically just kind of evened out and stopped moving up, my puts all of a sudden are back in the green. Now, the price drops, or the value of the stock drops. I lose approximately 10% on my shares, but my puts are up 40% from this movement. So I close and I take the 40% gain. Well, I still have the shares, which were actually about 1/3 of the position size, but I'm still in the game, right? So the next day opens and it's on a bull run and it's taken off, and I was able to cash out way up here. I was able to make quite a bit on my shares as well. So in that situation, I jumped into one side and the other. Which, if you guys watch my live videos, you'll see we love strangles and straddles. Same thing, but we love those because we love being able to get on both sides. Same thing with the credit spread iron condor. We make more when we can get it on both sides. So here we can see the same thing playing out. I grabbed both sides and I just waited for the optimal moment to sell both sides, right? I didn't know which way it was going to go. Now, could these shares have continued to tank? Well, absolutely. But like I said, I only lost 10% on that compared to a 40% gain, and I had more money into the actual put contract. So I didn't really lose a lot on the shares at all. And I'm sorry, I would not have lost a lot on the shares at all. So up here, here, I kind of did the same thing. Right here, when it hit about $4, I thought to myself, okay, all right, enough. 4 cents to $4. That's a 100 times move. That's as big as it gets. So I grabbed $1 puts and 50-cent puts for June, the next expiration. That gives me a whole month to sit on my hands and watch the price drop. Well, I didn't have to wait that long, did I? Because almost instantaneously it collapsed, and I was able to close my positions for about 100% gain each, both on the 50% and the dollar contracts. So it shows that there's definitely some different ways to play these. Because of being trained by Deckmar Trades, I always just kind of look the opposite as everyone else. As everyone else is thinking, oh, it's going to go higher, it's going to go higher. I think here it comes. It's going to come crashing down. So I get ready for that. So perhaps just moving against the momentum and doing the opposite of what you guys have been doing up until now will be exactly what the doctor ordered to start turning these losing trades that you guys have been involved in into some profitable ones. All right, guys, if you're still watching, I want to thank you for watching so far. I want to actually give you guys a little bit of a bonus here. So, this is something that I had just found literally this week. I'm going to give you two more approaches to find out how these things are moving, when they're moving, to give you an idea of when to get in, how to get in, when to get out, how to get out. Two more things that I've noticed that I'm seeing. One's an indicator, one's just something I'm seeing. Yeah, without further ado, here we go. This is a little bonus content for you guys who stuck it to the end. Congratulations. Okay. So, here a couple days ago, it was Wednesday, and I noticed something. So, I have this list. Is it Wednesday right here? Okay. So, I have this list of stocks that are all being short squeezed right now based on the screeners that we went over at the beginning of this video. And I went up and down this list right around like 10 a.m. and I just noticed something and I want to show this to you guys. This possibly could be an amazing beginning of the morning scalp that everyone can get in and get out in the first 30 minutes, first 45 minutes of the day, and make yourself a decent amount of cash, especially if it's an option contract. So, and I haven't seen it on the other side, it's just the put side. So let's go to Wednesday. Let's talk about it, okay? So at the beginning of Wednesday, I noticed that Hollow had a major dump. Okay. It is a short squeezed play. One side is going to win and then the other side's going to win. So, what did we notice about Hollow? We're on the other side of a major squeeze. It squeezed, it did what it was supposed to do. So, you can just imagine that there would have to be some good profit taking, right? Especially when it got back up there a couple more times but didn't make it. So, to me, that's what this looks like. That it just looks like profit taking. But maybe because it's a short squeezed play, the profit taking or that movement is exaggerated so much more because of the squeeze itself, right? So it happened here on Hollow. You'll notice that shortly after the first candle, maybe this would have been your indication because it broke this low, pre-market lows. That would have been maybe an indication to jump in. Another way I looked at these is maybe you can break them down to like 3-minute candles. Sorry, that messed it up a little bit. There we go. Maybe like 3-minute candles, and once you see like one or two candles confirm big movement, maybe that would be your indication to jump in. I'm not sure exactly how to play these perfectly yet because I just found them this week, but there's definitely some juice on these berries, guys. Definitely. So let's look at Hollow on Wednesday. Did a major dump, right? Let's look at Coles. Coles is also on the list at that time. We added it for that reason. Let's go back to Wednesday. And what do we see on Wednesday? Exact same thing happened on the exact same day. And this is big, guys. This is, I mean, $27 to $26. We're talking about a full $1 swing in only 15 minutes. If you're in an option contract, especially first thing in the morning, the speculative value of that put is going to go through the roof because the stock market doesn't know if it's going to keep going that direction. It's going to assume that it is. And that's why that value of that put contract is going to jump up nice for you guys. I caught myself a nice little 40% a scalp the other morning. And I feel like it might even be consistent. We have to obviously keep an eye on it, and we have to come up with some sort of a plan for like how we get in, how many candles, whatever, what are we actually looking for? A break of the pre-market low, I love. That's always a thing. Break of the pre-market low. A lot of people trade that way. So maybe that's when you want to jump in. But here's another one. This was MPW on the short squeeze list, dropped from that low of 529 all the way down to 497. So nice 50-cent swing, a put contract. If you were just a couple strikes away, this might have did very well, right? Nova, same exact thing. On Wednesday, Nova completely tanked. Now, what did Nova do the day before? It rocket shipped. So maybe that's another way we can look at this. If we're on the back end of the squeeze and we see that dramatic morning red candle movement, go ahead and grab a put and ride it on down. Because this one right here went for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So almost 1 hour, 15 minutes of movement that you could have capitalized on. You could have got in at any point and did, I would imagine, pretty well. Like I said, the speculative value of these contracts will start shooting through the roof because of that type of movement. It doesn't know when it's going to stop. So just a big dramatic swing in your direction like that can give you a pretty nice morning move. And if you can do one of these every day, this would be a nice way to start the trading day every morning. I mean, wouldn't you agree? So definitely keep an eye on these. Do what I did as far as getting the screener, getting yourself a watch list, and then just watch these every morning and see if you can find those plays, maybe like 5 or 6 of them that are dumping, that are just not doing well, and ride the momentum. So that's a nice little scalp for you guys that you can capitalize on first thing in the morning. Now, the very last thing I got for you guys, okay, this one's a big one. What you're going to do is you're going to go to the indicators and you're going to go in here and you're going to type MA cross, okay? One platform based indicator will pop up and then a bunch of community ones. You guys can feel free to go through the community ones if you want, but I'm personally just using the top one, okay? So I click that one and it brings it up right here for you, okay? Now, the MA cross is going to be default to a 9-day and a 21-day, which I'm happy with. I've actually tested just this indicator on futures, and a few of them test up to 75% successful. So it's a really good indicator to find movement and different changes in I'm sorry, trend. There we go. That's the word I was looking for. So yeah, it's a really good way to find where the trend is going. So now, if we combine this indicator with that movement, we can see that we would have gotten in way down here, but we still would have caught a pretty good swing there. So we would have been a little late to the party. So maybe this MA indicator wouldn't be the best for this morning move that we're talking about, but let's go ahead and talk about the actual squeezes that are taking place, right? So we'll go back to a 30-minute candle. We're going to go ahead and come over here and let's talk about the actual squeeze when it started, okay? So if you had at this point entered based on this MA crossover, you would have been in it for the whole squeeze. And you wouldn't have exited until it crossed again over here. Well, I mean, personally, I always like to look for these huge upper shadow wicks. If I see the huge upper shadow wicks, to me, it's run out of momentum, at least for the time being. And we could see a big reversal coming, which is what we've seen here, right? But what I noticed about these MA swing crosses is they get you in early. They get you in before the movement happens. So if it's already started its upward movement, like here with Coles, where you've seen it squeezed and it wants to squeeze again, at least here you got a little bit of an idea that it's coming. Or how about this? At the very least, the MA cross will confirm. So when you see this big breakout candle, even before that candle, when you see this big breakout candle, you got that plus to confirm it. So that would be your two confirmations that maybe you're about to go on another squeeze, right? Let's get another example of this. Nova. Nova just squeezed this week. Let's look at what these crosses did. So same kind of idea here, guys. It might give you a good idea of when the squeezes are beginning, because you might not see it here, but there is a cross here. So you get a cross right at the beginning of the squeeze, right cross right at the beginning of the, oh, right here, right at the beginning of the squeeze. And as long as the orange line is on top, you know that it's a bullish move. So even if it trickles out, let's say you had an orange on top here and it didn't necessarily go parabolic. Well, I mean, it still was a bullish move. And if you bought shares here, you're still okay, right? And then once they crossed here again with the green on the top, you could have bought yourself a put and you could have rode that put back down. And then once it evened out, you would have said, okay, I'm going to take some profit. And then here it crossed over orange. So you grab that bullish side again, got that big spike. You're in the money, 3 for 3. Okay. Green over the top comes, you grab on that bullish side. Well, right now you lost, you know? So what do we say? We say puts, because that put contract would have taken a few days. But look what happened, guys. You would have grabbed a put right here for, let's say, a month out, because I say give it at least 2 weeks. We don't know how long these short squeezes are going to last, maybe even 3 weeks. So 2 to 3 weeks out. A month out if it's a monthly contract situation, and you have a while before it's going to come back. So if you grabbed yourself a put based on just the moving average, which for me, I would wait for the movement and grab the put back down. But let's say you just want to confirm the movement, you want to jump in this put contract, you're still fine. Jump in your shares here, make your money again. You jumped in shares here, you made money here. Go ahead and do that. Your put contract doesn't go anywhere, guys. Yeah, you'll lose some money on it for a couple of days, but eventually it'll make its way back. And then if it does dump again from here, you're in the money for sure. Anything from here is most likely going to be in the money. All right, guys, so that's pretty much going to be it for my video. I've given you about 5 different ways to play these things. Hopefully, at the end of this, you're going to be able to kind of see the squeezes a little bit differently. And rather than being FOMO and being, late to the party, Larry, as I like to say, or a few of those I like to use, you really just want to be the person who knows ahead of time where it's going to go, and play these a little bit better. Guys, I want to thank you very much for watching my video. I'm going to be putting together more videos like this in the future. As a matter of fact, later today, we're doing a credit spread masterclass. If you've never heard about credit spreads or you've never done them before, definitely check that out. It's going to be uploaded later today. I have almost a 90%, right around 90 to, let's say a 88 to 92% successful strategy that you can play at the end of the day, that you can double your account every 3 months. But that's another video. So guys, I want to thank you on these short squeezes. As you see, these are some of the biggest plays out there. I know that we're reaching the end of the video, but I don't want this to be the end of your education. Okay, spend some time, learn about these things, maybe go find other approaches or the way other people are playing these successfully, and take what they're using and take what I'm using and put it all together into a new method that you yourself have created that works better. That's how a lot of these are created. We're just all sharing what we've learned. So if there's anything at all I can help you guys with, or if there's anything at all that you guys need to know, feel free to comment. I'll do my best to check on them and to get you guys where you need to go with this stuff. But all I ask is that for all of this information I've given, if you guys find any success with this, if you're feeling more optimistic about short squeezes, if you feel like you might actually have a leg in the game now, please smash that subscribe button. I am a new streamer. I've just gotten this stuff started, and I'm really excited to share this stuff with you. But unfortunately, because of the YouTube algorithm, nobody's even going to see this stuff if you guys don't like it, if you guys don't share it, if you guys don't do what you can do to get the information out there. So at the very least, subscribe. At the very least, like it. But if you can also share it, that'd be really great, because we don't want everybody, the retail investors out there, getting screwed over time and time again, while the big dogs all make their money and run. It's just not fair to us. So let's get some of that wins in our pocket. Let's have our accounts start doing those parabolic moves, because it's only fair that we get in this too, right? And we can make some money too. Thank you guys very much for watching. I'll see you next time.